would like to start today by asking a couple of questions to my viewers. The first is, how do you feel about me monetizing the channel? The second is, whether or not you like the new colors and visual feel of my Thinkorswim charts.
Looking at the 15-minute chart, it's looking rather bullish, is it not? We have a descending broadening formation with a 65% probability of an upward breakout. The upward target for that is $35. However, there is a chance that we will see a breakdown of this pattern, and I want to take a minute and talk about what that would look like. This is what I'm going to be basing my swing trade off tomorrow. So, we go to Bukowski's website, thepatternsight.com, and this is his page on right-angled and descending broadening formations. I'm going to scroll down until we get to a note about partial rises, okay? A partial rise works 47% of the time, he notes. That means, should we see the stock fail to continue to rise in price tomorrow morning, and instead the price moves downward, that this may signal a further breakdown to the target. Wow, are you serious? Yeah, I'm serious. And the thing is, the volume is decreasing. So tomorrow morning, I'm going to be watching volume very closely, like a hawk. Should it be less than the final closing bar here from Friday, that would signal that more downside is to be seen. And I'm going to zoom in a little bit on the 1-minute chart and tell you what I think that would look like. And I wanted to focus on this because right now there's a lot of Moaz hype. And I love Moaz hype.
I would love Moaz to happen this week.
But if it doesn't, I'm going to get ready to increase my cash position by trading to the downside. I fully expect to see the price plummet right off of the open, alright? If we're going to see the partial rise, which is to say that the price comes up and fails to reach this higher target, and the price just starts falling, I would expect to be a sharp sell-off. To breach that first layer of support at the pattern, a bounce back up to confirm that this is too high before reaching down to the target and seeing a modest bounce, a recovery of some sort to some degree. That is kind of what I would expect to see tomorrow should things shape out bearishly. Now, if tomorrow morning is a big day and we have good volume, you never know. The price could just move straight to the target before retracing and then moving higher. These are the two scenarios I see, and I believe that this is the most likely result. To see any kind of wish-washy further bouncing within this pattern just does not seem to be the way. It really doesn't, because implied volatility is so high. In fact, I'm going to pull up my study set here and show you what I'm talking about when I say implied volatility. This is implied volatility. Look at it going up and up and up. And this is going to be a huge indicator for me when we do start to see that rise upward should it happen. Now, you can see that the price rises in the final minutes, the last hour or so of trading on Friday. And I'm trying to zoom in. There we go. The price goes up and up and up and up and up and up and up, and that felt really good, and we saw it on good and increasing volume. And what happens here is the implied volatility is dropping. This is both good and bad. To see the implied volatility dropping after a massive dump would imply that the price is starting to stabilize and is moving back up. It's correcting, right? However, should this rise in the price continue and implied volatility continue to drop, that would suggest that an upward breakout and recovery is not yet in the works. We will start to see the implied volatility increase with the price if the price is going to break out and make a wild jump higher. So as the price rises, I'll be watching implied volatility very closely, and I probably won't enter into any swing trades on the upside until I see implied volatility increase. And that's probably going to be my cue for the downside as well. As soon as I see implied volatility start to increase, then I'll begin the swing trade. But until then, I'm just kind of sitting on my hands and I'm waiting. It is okay to hold on to a cash position. Holding that cash position gives you the opportunity to wait for other people to make their bets before placing your own. And that's a good way to think about it. Because right now, ending Friday in the middle of this chart pattern below VWAP, it's pretty much in the air whether or not we're going to see a bounce up or a drop down. I do want to go ahead and look at some of the options chain info to try to help get a more clear idea of what could happen tomorrow. You are going to see my open positions. Just remember, I'm not a professional, and you should not just mirror what I'm doing. I want to take a moment here to look at the puts. The put volume at 348,000, exceeding the call volume of 339,000. This is a pretty good indication that we're going to see the price drop more. Looking at this week's options chain, it is pretty robust. I do have a $40 call. I kind of expect that to expire worthless, and judging on the open, as I was talking about earlier, I may just sell this call right away and then buy a put. I am holding a $21 put, and it's making me money. I got in at the 57-cent premium, and it's now going for $1.20 or $1.02. So I'm up $45 there. Deep out of the money puts are a great way to hedge your long position. If you have made some money trading to the upside, why not buy a super cheap deep out of the money put just in case the worst happens? That is how I survived this dip, was by buying puts. It's just part of the game. Play a full hand, play both sides of the court, yada yada yada. There is a lot of open interest at the 12 and the 15 and the $20 strikes. This makes me think that there is going to be some effort to reach those levels. There is a lot of money to be made in puts if the price drops that far. So I'm going to be watching that lower level, that lower trend line of our descending broadening formation very, very, very carefully. It could be a bad week, and just brace yourself for that. I know there's a lot of MOAS hype, and that might be an effort to exhaust the retail trader just one more time. Give them hope and glimmer of a recovery, and then just knock them down one more time. How many people are going to get back up? That's the question. I'm not going anywhere. I'm playing both sides of the market. I will be here forever, and honestly, if this is how the game's going to go, where just the volume in the puts and the calls can lead to profitable trades, that's great. You know, I'm a swing trader. Volatility is money to me.